Australia's banking sector has been issued a warning over its lending policies as national regulators eye the country's mortgage arrears, which have reached a 5-year high. The International Monetary Fund recently identified Australia's soaring national household debt as a major risk to economic stability.
You may have heard the expression safe as houses. Well, with the nation's mortgage arrears at a 5-year high, it seems many have taken the old saying to heart.
In this country, a lot of people will make the mistake, or just as general consumers, that if a bank is going to lend me a certain amount of money, then surely I must be able to pay it back.
But regulators fear many can't. The Reserve Bank has warned a third of households are at risk of defaulting on their mortgages because they don't have a savings buffer. Now APRA has stepped in to tighten lending criteria, imposing new controls on loans, where borrowers must report their income, living costs and postcode to determine how much money they can afford to borrow. APRA is also reducing the number of interest-only loans being granted. The Big Four have until September to cut their interest-only loan portfolios below a third.
Basically what banks are doing is they're trying to move people out of interest-only and putting them more into principal and interest repayments, which cost you a little bit more.
In Sydney, mortgage brokers say changes have already curtailed home loan activity.
Now that these changes are coming into effect, they either can't get the loan at all because they can't afford principal and interest, or they're having to reduce the amount that they're borrowing.
New ABS figures show that households are spending a smaller percentage of their income each week to pay back their home loans than they did a decade ago. The figures don't, however, reflect record low interest rates, or that many more households are only paying interest on their mortgages.
In its latest report, the Reserve Bank has flagged possible risks to economic stability that go beyond household debt, including flat wages growth and the fact that the Sydney and Melbourne property markets have gone off the boil in recent months, with lower house price growth and falling auction clearance rates.
While some fear the implications if the RBA raises interest rates.
The latest economic news was not good certainly for prospects of higher interest rates. Retail sales down, no surprise, incomes growth is the lowest we've seen, inflation is flat.
As for those poised to enter the housing market without a cash cushion, experts have this advice. Just because you can doesn't necessarily mean you should. Camille Bianchi, SBS World News.